Matt from the Trade Brigade here doing a technical analysis on ticker symbol DIS for Walt Disney Company. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know that Netflix gave an earnings announcement after the bell and completely fell apart, about 100 points lower. And Disney, having a streaming service, of course, is giving a little bit of sympathy here. Let's turn on the extended hour session, kind of see what's been going on. Likely that we open on some sort of big gap down for tomorrow's session. It's not a guarantee, so please do reassess by the time 9:30 rolls around, but we have a framework to put into place, right? We want to know where the overnight low is. We want to know where the forecasted opening print is, just above it here. And then we also want to know where today's low of day is, and that's going to give us all we need to know to navigate the open. Hopefully. So obviously the market can always do whatever it wants to do, but with this framework in place, we have some areas to get involved for risk-friendly trades. So scenario number one is the gap and trap. What that looks like is opening here, failing to take out the overnight low, finding new sellers essentially, and then trading long back up through the open triggers a long-sided trade to start to fill the gap. Now, because of the magnitude of this gap, I would start to pay attention to the half gap fill. So let's take out the fibs from the forecasted opening print to the gap close here. That's roughly at 144.30. Let's throw that on with a regular price level. And then we'll just recap one more time. So, oops, we don't want to duplicate. We want to remove. There we go. So here we go. Open here, fail to attract new sellers, long back up through the open. Target 1 and target 2 is up there for the gap close. Is it likely? I'm not entirely convinced given the severity of the Netflix gap down, but maybe people see some value in Disney and the fact that it's not just a streaming service, so it does ultimately move higher. We'll have to see, right? But that's the upside scenario. Scenario number 2 would be the gap and go, meaning that we're looking for lower off of this gap down continuation. Generally speaking, it's not the favored scenario, but if it were to happen, how it looks is we open here, we put in a bearish consolidation pattern over the overnight low, that overnight low breaks, and then we look for the next daily area of support. So let's find that together. That target is going to be, if we scrunch up the chart here, we're looking for something roughly around 140. That's going to bring into play some of these areas in the chart here. I like this. Yeah, that's going to be it for me at least. Around 136.89, prior area of resistance, then pulling back after the gap up, holding it as support before the next leg higher. That's got to be the number to me at 136.89, call it 137, roughly that zone. Give it about $1 worth of wiggle room. Is it likely that we get there all in one go? It's about a $4, $3-ish move lower. For tomorrow's session, certainly on the table, given the severity of the news with Netflix at least. But again, would I pile on short here? Wouldn't be my first indication, probably looking for the gap fade as the first and primary objective. That's going to wrap up Disney. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.